Welcome to the 2022 Child Care Relief Fund Guide to Prorating Costs. Today we'll talk about how to prorate your business costs when your child care business is a subunit of or part of a larger enterprise. The information contained here has been prepared by Civitas Strategies Early Start and is not intended to constitute legal, tax, or financial advice. The Civitas Strategies Early Start team has used reasonable efforts in collecting, preparing, and providing this information, but does not guarantee its accuracy, completeness, adequacy, or currency. The publication and distribution of this information is not intended to create, and receipt does not constitute an attorney-client or any other advisory relationship. Reproduction of this information is expressly prohibited. In today's webinar, we'll go over several topics, including different child care locations and setups, the difference between shared costs and actual costs, different methods of proration that are available to you, and how to prorate your business expenses. Child care centers have a lot in common, no matter where they're located. Whether you're providing care from your home, a dedicated center, or a church basement, your goal is to offer a safe and nurturing environment. You likely will also incur business costs while doing so. These costs may be similar from one organization to the next, but there are some notable differences between these location types. Whether you are calculating your cash flow forecast, your child care relief fund expenses, or your tax deductions, it is a good idea to understand the key differences in calculating expenses for different types of child care businesses. If you operate your family child care program out of your home, it's likely that many of your expenses are shared between your business and your personal home life. Figuring out which expenses can be deducted from your taxes or are eligible for CCRF funding can seem complicated, but luckily it's actually much simpler than you may think. Home-based family child care providers can use what's called the Timespace Calculation to figure out what percentage of their expenses can be attributed to their child care business, and therefore are eligible for tax deductions or CCRF reimbursement. The Timespace calculation considers the percentage of space in your home that is used for business, as well as the amount of time your home is used for business. You can learn more about the Timespace calculation in our guide that is available on childcare.texas.gov or by scheduling a free call with one of our business coaches. If your organization is a child care center that is not housed within a larger business or organization, determining how much of your expenses are allocated to your child care business is likely a lot simpler. That's because the answer probably is all of them. If 100% of the supplies, services, or materials that you purchase are used for your business, then 100% of those costs will be considered business costs. If your child care operation is part of a larger enterprise, then only a portion of your expenses may be allocated specifically to your child care business. This would be the case if, for example, your child care center is part of a YMCA or a local church. To figure out what percentage of expenses are specifically associated with your child care business operations, you will need to prorate your business costs. Prorated costs are those that are divided proportionally based on a unit of time, location, or another factor relevant to the business. For example, if your child care business is located in the basement of a local church, the utility costs would be shared between the child care business and the rest of the church. Because only a portion of the building is used for a child care business, only a portion of the utility bills would be considered child care business expenses. To determine how much of these costs can be allocated to your child care business, you will need to prorate them. Prorating your costs is a four-step process. The first step is to document actual costs that impacted your child care business and only your child care business. Expenses that can be allocated specifically to your child care business include any supplies purchased only for the program, payroll and personnel costs for child care center employees, personal protective equipment and cleaning supplies for the child care center, and any goods or services that are material to running the child care program. Maintenance and repair expenses for areas of your facility that are used solely by your child care program could be included here too. We highly recommend that you maintain accurate business records to document all of these costs. See our guide called How Can I Set Up a Record-Keeping System on childcare.texas.gov to learn more about what documentation you should be saving and for how long. The second step in prorating costs is to document the costs that are shared between your childcare center and the rest of your facility. Calculating shared expenses can be a little bit trickier, but doing so is worthwhile to your bottom line. In order to be allocated to your childcare business, the expense must have impacted your childcare program in some way. The cost also must be considered reasonable and necessary in order to operate the childcare business. Take, for example, electricity. It's obviously needed to run the business and as such is considered an allowable expense. Electricity is also used by the entire facility, so therefore it's a shared expense. Other shared expenses could include things like repairs to a shared church parking lot, as it's needed by both parents and parishioners for parking. But a renovation of something like a church's tabernacle would not be considered an eligible expense, as it's not necessary for operation of the childcare business. Similarly, maintenance to areas of the facility that are shared between your childcare program and other operations would be eligible, but maintenance made to an area that is not used at all by the program would not be. If, for example, you are part of a YMCA with 3 campuses, where only one campus houses the childcare facility, only the costs incurred at the location with the childcare center would be eligible. The next step is to choose a method of proration. Figuring out exactly which expenses are eligible business expenses requires choosing a method of proration. 3 options that you could use are percentage of total square footage of facilities, percentage of total revenue, and percentage of total costs. Whichever method you choose, the important thing is to be consistent. That will keep your numbers and your accounting consistent as well. The first method of proration we will discuss is percentage of total square footage of facilities. In order to calculate this percentage, you will take the number of square feet of the space used for your childcare program and divide it by the total square footage of your entire facility. First, you'll need to calculate the square footage of the space used for childcare. To do this, you multiply the length of the room by the width of the room. If your space is 12 feet long and 10 feet wide, your square footage would then be 120 square feet. For oddly shaped spaces, such as rooms with an extra nook, you can break your room into smaller rectangular blocks, use the square footage calculation for each block, and add the totals together. Once you have your totals, you divide the square footage of your childcare space by the square footage of your entire facility to find a percentage. For example, if you use 1,000 square feet of your facility for childcare space and the entire facility is 5,500 square feet, then you would divide 1,000 by 5,500. The result is 0.182. Multiply that number by 100 to get a percentage, 18.2%. This means that 18.2% of your overall expenses, such as utilities like electricity and maintenance like the parking lot example we discussed earlier, would be eligible. Another common method of proration is to calculate what percentage of your total revenue is made up by the revenue of your childcare program. First, you need to calculate the total revenue for your entire facility. If, for example, you are a fitness center that includes a childcare program, you would need to calculate the total revenue from all of your programs, including the childcare program. Next, you will calculate the revenue from your childcare program only. Make sure you are using the same time period for both of these calculations. Typically, this would be your fiscal year. Next, you will divide the revenue from your childcare program by the total revenue of your entire facility. Once you have that figure, you'll multiply it by 100 to get a percentage. For example, if your child care program revenue is $25,000 and your total revenue is $200,000, you will divide 25,000 by 200,000. The result is 0.125. Multiply that number by 100 to get the percentage, 12.5%. This means that 12.5% of your shared expenses are eligible. The third method of proration is percentage of total costs. This is similar to calculating the percentage of total revenue, except that instead of calculating the amount of money that comes in, you are calculating the amount of money that goes out. The first step is to figure out the cost for your entire operation, including the cost attributed to your childcare program. Next, figure out the total cost for your childcare program. This should include the dedicated cost for the program, things like supplies and salaries, but not costs that are shared between the childcare program and the entire operation. Think back to the parking lot example that we discussed earlier. The money spent on that should be included in the cost for the entire operation only, as you do not want to double count costs. This can get confusing, so if you have a lot of shared costs, choosing another method of proration may be a better option. Once you have both figures ready, you divide the total cost of your childcare program by the total cost of your overall organization. Once you have that figure, again, it will be a decimal, multiply it by 100 to get a percentage. Say you spend $15,000 on your childcare program and you spend $95,000 overall. You will divide 15,000 by 95,000. Your result is 0.158. Multiply that number by 100 to get the percentage, 15.8. This means that 15.8% of your shared expenses will be eligible. Now that you've chosen a method of proration, you can apply that result to your cost to figure out your total allowable business expenses. Take the percentage that you've calculated using your method of proration and turn it back into a decimal. For example, in the previous example, we came up with 15.8% as our proration percentage. Now we'll divide that by 100 to get a decimal, 0.158. Take that decimal and multiply it by the total amount of shared costs. It's important that you include only shared costs in this calculation. Once you have the resulting figure, you can add that to the total amount of dedicated expenses for your childcare business. The result is the total amount of costs that can be allocated to your childcare business. Remember, consistency is key. You can learn more about how to set up a record-keeping system in the record-keeping guide and more about how to use the Timespace calculation in our Timespace calculation guide. Both are available at childcare.texas.gov. If you need help calculating your prorated costs, our guide includes a worksheet that does some of the math for you. You can find that in attachment A. If you need additional help, tools and resources are available at childcare.texas.gov. Here you will find links to business resources in English and Spanish, as well as a form you can submit to request free business coaching. Coaching services also are available in both English and Spanish.